Welcome back to the Commercial Real Estate Show. I'm Michael Bull. We're speaking with Ann Hambly with First Service Solutions, a CMBS borrower advocate, and we're talking about debt. And one of the things that I think a lot of people are seeing as a potential opportunity is there's a lot of debt that has a 10-year maturity that was originated at the top of the market, 06, 07, 08, and some of these loans are coming due. And a lot of people would like to invest with some of these sponsors who may need some capital. So, Ann, what are some tips for an investor who is looking to do a joint venture recapitalization and get involved with some existing sponsors on these deals that may be upside down?
Well, let me give you, first of all, too, just a perspective here. In 2016, the remainder of this year, there's about $80 billion set to still mature. And about 65 to 70% of that, according to Morningstar, one of the rating agencies, will be able to pay off. That leaves, if I'm doing my math right, 30% or so that won't be able to pay off without some infusion of capital. In 2017, the number's bigger. It's 103 billion maturing, and they only expect about a 50% payoff rate there. So there's a lot of opportunity here. Some of these borrowers, the way to think about it is in 2006 and 7, for the most part, they cashed out then. Some of these borrowers have been carrying these properties. Most of them are emotionally tired, I can tell you, capital drained, and just anxious to kind of get this over with, and are not looking to put more new money in to pay off this existing loan. So we're finding many opportunities for investors to want to take advantage of these opportunities, to just by working with an owner, and usually you have to have someone kind of in the middle here. We all could, probably your company and my company does things like that, but we would connect basically an investor with a borrower who is pretty much done and wants to get out of the property. So there's not only opportunities to just take over the property, but there's also times where the borrower wants to stay in, needs to stay in for tax reasons, but is really willing to take kind of a back seat or partner with someone. So we are seeing these loans getting paid off sometimes through a joint venture, however it's structured, with a new capital partner and an existing owner. And that's how I believe most of these need to be solved, much better than letting the special servicers get them all back through, foreclosure.
Right, and this could be a good alternative for an existing sponsor or developer who has a property. Maybe it's not leased up. He needs an infusion of capital to give up some of the partnership to this new investor. What's a real quick description of how you've seen some of these put together?
We've seen actually the investor may be coming in and buying the note at a discount. So now the investor becomes, in essence, the new lender, if you will, to the existing ownership. The new investor will usually give some kind of good news money to help stabilize the property, as you just described. And the benefit there is the current owner has some participation in that on the back end, or at least needs to pay the loan off within a couple years. But so that's probably the most common way I see it happening today. Okay. Or another thing I've seen is the current owner has some money to invest, but not all of it. So he partners in the same manner with the new capital source, and together they buy the note out of the trust. In essence, they pay the loan off, okay, and then partner going forward.
Ann, thanks for joining us today. We appreciate your insight.
As always, Michael, I appreciate the opportunity.
And thank you for joining us out there in one of the radio stations around the country. Maybe you're listening on iTunes or the show website or on YouTube. And be sure and join us next week, especially if you lead a business. We're going to talk about office tenant strategies. It will be a good one. Until next week, be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull Realty, Asset and Occupancy Solutions, Xceligent, building data everywhere, CCIM Institute, the industry's global standard for professional achievement, Valuate, easily share what-if analysis with colleagues online, and First Service Solutions, your CMBS borrower advocate. For more information on how these businesses may be of service to you, visit creshow.com.